Welcome to the first episode of Stock Analytics. Today I'm going to analyze the Domino's pizza stock. I'm looking at the key matrix to determine the fair value and the buy price for the stock. Domino's is a food service stock which is specialized in selling pizza. The revenue of the company is $4.3 billion. Since it's a franchise, the company earns money through selling equipment and license fees to the franchises. The company has a market capitalization of $19.73 billion. The revenue can be divided into 5 different segments. These are the supply chain with 59%, US franchise with 12%, US advertising with 11%, US company-owned stores with 11% as well, and international franchises with 7%. Now I'm going to determine how much I should pay for the stock. To determine what the fair value of the stock could be, I will start with looking at the dividend yield in a historical chart. I choose the dividend yield because a consistent dividend policy for me is the best indicator for a stable company. To smooth the curve, I take the 5-year moving average of the dividend yield. The simple approach is now that the stock seems overvalued when it's under the moving average and undervalued when it's over it. The average of the last 5 years is 0.91%, and I would like to define this as the historical dividend yield. To this historical dividend yield, I add 25% marginal safety, which I will adjust upwards or downwards depending on the matrix of the company. The first thing I look at is the dividend growth. The dividend has increased from $1 in 2014 to $3.76 in 2021. The company has raised its dividend each year since 2014. In the last 5 years, the dividend growth rate was 19.86%. The 5-year dividend growth rate is even outside the rating scale, which means 10% is being subtracted from the margin of safety. Next, I'm looking at the payout ratio based on the free cash flow. The free cash flow from the company increased from $0.27 billion in 2018 to $0.62 billion in the last 12 months. The cash dividend were respectively $0.09 billion and $0.14 billion. The average payout ratio from 2018 until now is 27%. This value is inside the green area, therefore 5% is being subtracted from the margin of safety. Next, I will take a look on the debt of the company. The company has a debt of $5.3 billion, $0.3 billion in cash, and an EBIT of $0.88 billion. When the cash gets subtracted from the debt and this value gets divided by the EBIT, the debt to equity ratio is found, which for Domino's is 568%. This means it will take over 5 years to pay off the debt if the whole EBIT were used for this. On the scale, this value is in the red section, therefore 10% is added to the marginal safety. Now I take a look at the revenue, EBIT and margin growth to find out whether the company is still growing. The revenue has increased from $2.7 billion in 2017 to $4.3 billion the last 12 months. This gives an average of 12%. In the same period of time, the EBIT has increased from $0.522 billion to $0.804 billion, which gives an average of 11%. The margin is found by dividing the EBIT with the revenue, which in 2017 gives 19.3%. The margin, however, has decreased to 18.7%. The margin therefore decreases with 0.8% each year on average. An EBIT growth of 11% is very good, therefore I subtract 10% from the margin of safety. For an average margin growth of minus 0.8%, no adjustment to the margin of safety is made. Every adjustment to the margin of safety have now been gathered. Minus 10% for the dividend growth, minus 5% for the payout ratio, plus 10% for the debt, and minus 10% for the EBIT growth. The margin of safety is therefore 10%. This leads to a desired dividend yield of 1.05%. By a current dividend of $3.76, I should not pay more than $320 for the stock. By ignoring the margin of safety, the fair price for the stock would be $368. This can also be shown in the graph. To do this, I just add the line in the graph for the historical yield. As seen in the graph, the yield is under the marginal safety line, and therefore I consider the stock as overpriced. Finally, I consider the stock at its fair value when the price is $368. I will buy the stock at $320, and the stock price is currently at $431. If you want to support my channel, please like this video and subscribe to the channel. That was all for this video. Thank you for watching.